Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the pump that we had last night, and it was quite a good one, right? We broke through that $42,000 level that had been a pretty stiff resistance for us, and we've basically pumped up to about 43, let's say 400, and now we're doing a retest of it. The beautiful thing about this structure right here is that we are building these steps up, right? Sort of like we did back here when we hit, around 34,500. We just built steps up, and as we did that, we were able to climb up. And you can see the major price action that's been valid has pretty much just been these steps. And then we kind of had a detour here. We kind of had a little crash, but the steps continued, right? If you just kind of think about this as a just a general trend, right? We made these steps sort of like we're just climbing up, a ladder or, the front of a building until we take that, until we reach an escalator. Well, these ones were just little detours, but this is our path. And so it does suggest that we would have a pullback, and indeed we've had that pullback. And so we're just going to see if this is just going to chop around for a while. As you'll notice that we do get these, kind of patches, these consolidation patches, which have a little bit of volume to them, right? Something like that. And so this is one, this is one, this is one, right? You get the idea. They fill up a certain amount of space before we move on to the next one, right? And so it wouldn't be surprising if we just kind of, chilled out here, maybe made a couple up and down moves for a little while. And that wouldn't be a bad sign. What we really don't want to be seeing is too much of this sell pressure down. As you can see at the top right here, that wasn't a very good indicator, right? And so the fact that we're seeing these type of candles, it's not the best. You can see we can pump above them and then we start coming down, right? So what we don't want to see is that kind of chop down because this was kind of a nice pump and, it could always get reclaimed. But the fact is that if we are just, retesting the breakout of that resistance, then it's not too bad. If we go ahead and take a look at the range that we're playing in, we are now quite heavily at the top of that range. And, the golden zone, we broke out of it. We retested it a couple times, and now we're pushing off of it, right? So these levels really were that important, and they also supported us down here, and it was what was resisting us down here. So this is a good sign. This is almost the inverse of what we did down here, going, well, if you went backwards in time going down this way, we're kind of doing it right here, right? So hopefully we can continue to make this little march upwards. And if we consider the buy zones that I had marked out, I was telling you this might be your last chance to get in before we start breaking these levels and really are kind of in a higher risk area. So I do consider these to be higher risk areas. If you look at that wick right there, we went right to this top buy box area that I have marked off. And so, if you had bought here, you could have taken a little bit of profit at this resistance, and then you could have sold up here in this box, and you would have been in pretty good profit. You don't know if we're going to slam all the way down or whatever, but you know, if you've been following this type of buy path, then you should be in pretty good shape if we do have a run coming up here. And again, if we do get pullbacks, just based upon the structure of the market, I mean, unless something catastrophic happens, it wouldn't hurt to just, take your DCAs while you can. Let's see, the wedge. If you look at the wedge, it's, this has worked out almost perfectly. Of course, I fine-tuned it just a little bit over the episodes, but yeah, pretty much staying in my wedge right here. This top bounds, And so let's go on to a lower time frame. And you can see we almost, we almost tested it to the dollar accuracy right here, where, we did a very similar thing with this move previously. And if you consider this type of a path, right, then even if we get that choppiness that I was talking about, that consolidation area, and even if we do come back down, you might be considering that it could take a little while. It could take a little bit of a while to do something like that and then come back down, right? So if you were able to buy on this pullback when we turned this resistance, you see resistance, resistance, resistance into support, we flipped it into support, and if you bought in, then you could potentially be trading in this zone where your sell area is kind of up here and your DCA is just down here. Of course, you probably don't want to be DCAing on this side. You want to be DCAing either right now, or when I told you yesterday and then the days before that we were in goodbye areas before a possible pump. As we get higher up, of course, this becomes super risky. So, it's up to you at this point, but it just becomes riskier the higher we get because we have been trapped in this wedge. And, you can think about it as horizontal levels or you can think about it as diagonals, but because you can also see, right, this area right here is a resistance as a horizontal. But, just generally speaking, we've been kind of pushed down in this wedge and pushed up in this wedge. And so our price easily can get back under this level. And if that happens, then anything that you bought up here would obviously be underwater. So just keep that in mind. I really was trying to emphasize to buy at the bottom of this wedge because the structure gave it away in the beginning, right? In the very beginning, we had this, ultra, far down wick, and we had these, this kind of wick up here, which was showing the body of the wedge, was going to be contained in this area, and that this was kind of just an extreme. These are extreme areas. So you want to be buying at the bottom half, of this wedge, and yeah, not much too much more to say about that. We haven't broken out of this thing yet. Nothing too special going on. A lot of people want to make a lot of big deals about this, but to be perfectly honest, it's nothing special. We could easily come back down. We could easily put in another, wick like this. We could easily break down and do a double bottom. That's not what I think is going to happen, and I'll show you a little bit. I'll show you why a little bit later. But just keep in mind that that is a possibility. And then if we go into these channels that I've been marking off, just on the really super small time frames, you can see it's been respected pretty well, right? So again, sorry, I don't use horizontals very much. For some reason, I just can't see in horizontals very well. But the diagonals, they just click with my brain. So if you're like me, hopefully you enjoy this. But if not, sorry about that. I know that most charts out there are on horizontals. But as you can see, I marked this off as a heavy resistance or support area. It was a support right here. We had kind of a breakdown, right? This is one of those Z patterns that I talk about. And then we used this as support, and we just kept bouncing off of that area. And this was kind of a scary moment for a lot of people. I did mention to you guys that I wasn't worried unless we broke down under 40,000, and then unless we broke down under this 37,500, which corresponds with my diagonal on the triangle. So those are my two kind of like danger zones. And that's still true right now. So, we don't want to come back to these lows basically. But if we just, play around in this area, maybe as low as 41,000, right, for the main body of the price action. And then even some type of a wick down to, what was that? That was 41,500. And then some wick down to, 41,000, say 100. That's fine. And again, we really don't want to lose this high that we put in, so you don't want to get to these lower levels. But if we did have some kind of crazy shenanigans or some type of shock in the market and we just flash wick down there, not too big of a deal as long as the body of our price action stays above this pink diagonal up here and that we hold it as support. Even if we walk down it a bit, wouldn't be a big deal as long as we didn't get under that 41,000-ish area, because this is a diagonal downward, and that would still give us the possibility to play it upward. Sort of like what happened here, right? You put in this price action and then you kind of walked it down a bit, but then you pumped up again. Only what we want to see happen is it do that in this upper area. If it does it down here, we're in risk of getting rejected. So kind of looking to keep in this $42,000 to $44,000 region and just build some stability there and then hopefully pop up. But again, this is our resistance zone. If you did take those trades, good for you. Congratulations. Probably in pretty nice profit right now. If you were scared out of the market, sorry guys, I don't know what to tell you. I did my best to try to tell you guys to buy down here. And although I was warning about the resistance up here, what that really means is that you just start to DCA out, right? Like if you bought in here, you would want to start to DCA out as soon as you cross that purple line. DCA out, and then if you reached up here, then you could, DCA out a little bit more. And then you reload when we're at the bottom of this wedge. And then you DCA out, take your profits, get some more cash in case we drop down, then you buy more, right? So you always have a little bit of money to buy the bottom, and you always take a little bit of profit up here so that you can put cash into your wallet, right? Let's see here. Kind of tired today. We are just marching up these midlines. Let's see, let me get rid of some of this stuff. We are kind of marching up these midlines, and I think this is on linear. Yeah, should be linear. Where you can see this majority price action right here, right here, right here, right here, right here, right here. And if we're in luck, guys, what's actually happening is that we're getting funneled up into this price action. And that's going to be that $44,000 to $46,000 area. And we're looking for that breakout, right? We're looking for that breakout. So I'm really considering that this is kind of funneling us up into this type of magical zone here, right? Where we get these great pumps, right? We have this zone here, we got a great pump. We broke down from it, we smashed to the bottom here, but we got up into it, we had a great pump. We got resistance up here, and we got back into it, and we had a great pump. So as long as you can hold on to this area, there's a potential for a great pump coming up, right? At least if let's say we got into here, I would expect this similar type of thing to play out, where here you had your resistance. You can see it used as support here. Here you had your resistance. Here you had your resistance. And so if we can get into this $44,000 to $46,000 area, which I've been saying for weeks, right? I've been saying for weeks about this, and then use the top of this wedge as your support to just jump off of, then we could potentially be seeing, mid, lower 50,000s. And if we got on top of that and we were able to hold there, Well, you know, there's a good chance that we could break down, right? Just like this, like some type of reaction rally to the downside. And then we would regather that support. So you would want to hold that 46,000 that I've been talking about. And if we held that 46,000 for a second time, potentially we could do another, massive bull run pump. And so this is really a critical zone here, really a critical zone. We've been talking about playing this range, but soon we're going to be talking about playing this range, okay? And that's what you're going to be preparing for. Where you can buy in, again, is along this type of magical middle here, right? I don't want to call it my golden zone because I've already marked off a different golden zone. Oops, I just deleted my golden zone. There we go. Right, this type of golden zone. If we had been suppressed underneath that golden zone, then we would have been looking very bearish. But the fact that we jumped on top of it, are sitting on top of it, and are now in this magical diagonal zone, that's a really good sign. That's a really good sign for me. And I just want to get on top of this wedge and inside of that kind of magical golden zone here. And then, it's going to be looking pretty good, guys. I really will have a great feeling about that. And do I want to get too much into this? Not really. But you can see kind of confluent with this, right? With this structure over here, you get into that kind of a magical zone. You break through the middle of this, this purple area, this purple diagonal. You break on top of that. So again, sitting right there, right on top of this wedge, all of this is confluent with each other. You sit there and you're going to have a chance for a nice pop, probably hitting around 49 to 50,000, doing a little bit of retracement, testing this diagonal, and then coming up here to 52,000, maybe a little bit of resistance, then maybe a little bit of exuberance, a fake out just like this, or maybe we just curve down. But whatever happens up here, it's going to be a little bit of a tricky zone in this $52 to $53,000 area. And it wouldn't be surprising to come back, retest this zone right here around 56,000, and then pop up on our way, right? And probably the scary zone, right? They tried to scare us with this drop right here to 39. The scary zone would be, something like 42,000, right? They're going to try to freak us out. But we're not going to be scared as long as we hold this wedge, right? It's this wedge that I've been developing for a long time. The wedge that I've been developing looks a lot different than the wedge that other people are drawing out. Everyone else is drawing an accumulation wedge because they're using those horizontals. But I'm telling you, this kind of equal, I don't know what you call this type of wedge, the type of triangle that's kind of equal, which could have broken down, right? It could still break down, in fact, because we're not out of the woods yet. We're still here. But if we do get on top of that, that's just going to be extremely bullish. And this thing is also going to provide support for us. And the people that don't have this drawn out, they don't, they're missing a possible future support that they're going to have here, right? So the reason why everyone was scared in this zone back here is because they didn't have, certain things marked out. They didn't know about this, this dotted line right here. If they knew about that dotted line, look, look at this precision touch, right? I didn't draw this like considering this thing. I drew it using a whole bunch of other factors, right, on a higher time frame. And so the fact that this is touching perfectly here, I mean, it just shows you this was sort of like a retest of this line. You can see this wick, right? It's a retest of this line and this, kind of a fake out type, try to scare you out, right? But it was support. And likewise, we're going to see some things happening up here. There's actually a lot of confluent support right here if we do end up breaking down at a later time. And they're going to try to scare you out of your money again, but you're going to have a couple zones where you can make you're going to be able to make some good decisions. We're getting too far ahead of ourselves. One thing that I did want to show you is let's go to we always talk about squeeze plays and the EMAs. So I want to go ahead and put the EMAs on. And normally people are kind of trading on the 1 hour and the 4 hour, those type of things. And so they miss a lot of good information when you get on the higher time frames and when you play around with these weird, time frames. So for example, the 5 day, right? The 5 day, you can see we're getting into a possible squeeze zone. We've been there before, and then we got rejected. It looks like we're kind of getting rejected again. So 5 days not ready. 5 days not ready. How about 3 day? 3 day had a nice little squeeze right here. Getting kind of rejected by the 50. Okay, we've seen that happen before, right? The 50 and the 89. But the 2 day, now that's interesting. The 2 day has 1, 2, 3 candles on top of it between the 200 and the 20 and the 10. So both the 20 and the 10 are lifting up the 2 day, and it's being accepted. It hasn't been rejected yet. If you really get in there, you can see that we now have, I mean, you could call it flat, but we're very close to having a positive curve. We're very close to having a positive curve on this 200. And when we get that positive curve, then you could see something like this, but you could also just see it just pop up, and that could take us into that $46,000 and even that $50,000 region. Again, we might have a pullback somewhere around here when we hit these resistances, you know, but there's nothing wrong with that, doing a little retest and stuff. And then for the EMAs, we don't have too much resistance above us if we are able to break that 200 on this 2 day. So we are looking forward to that. A couple days ago, I was telling you that we were in a precarious situation where it could get squeezed up or it could get squeezed down. But we do look like we're getting squeezed up, and that's going to be very good, very good for trading if we are able to hold on to this level, which is approximately 42,350. I was pointing this out in my friend's group earlier yesterday. And, we did it. We busted through it. That was the critical number to kind of beat. And, we did it. And then not only did we do it, but, we came back. We came back here and we tested it. And we're kind of retesting it. So, and it's really like this. So can we hold it? That's the question, right? Are we just retesting it or are we getting rejected from this higher area? Like we don't want to break down below that 42,000, I mean, let's just call it 42,250, okay? Because if we hold that level, then obviously we're going to make price action above it, which means that that 200 EMA on the 2 day stays in place and we keep getting squeezed up. This 55 is kind of threatening it, right? This 89 is kind of threatening it, but they're also slowly curving up. You see that? They're slowing down their trajectory downward and they're slowly starting to flatten out. So if this just buys some time, and it could take a couple weeks, if it just buys some time, then potentially it can pop up. We're not there yet. These are acting like enemies. This is down, this is down, this is down, this is down. This is the squeeze play that's bringing us up. So far, the 10 has been doing all the heavy lifting. The 20 kind of joins in sometimes. But if we can get the 200 on our side and sit on the 200 on the 2 day, that's going to be a very powerful friend, right? Even though, the other half of the EMAs are kind of acting against us and could smack us back down. at least we could get a pump. And I want to show you something about this, which a lot of people probably haven't considered, which is whenever we did get a squeeze play on the with the 200 and the 20 on the 2-day, right? Look at the type of moves that we put in. I've marked them all out. A 30% pump, a 35% pump, a 150% pump. See, here's the 200 and here's the 20. All right, a 20% pump. It's kind of a fake out, right? This is a fake out before you had that massive crash. This was not related to COVID. This was just regular price corrections, but you still got a 20% pump on top of that 200 when you got on top of the 200. And then over here, you can project where the 200 would have been, and it was an 80% pump. So we're talking about 18% pumps all the way up to 150% pumps, right? That's what we're talking about as being possible if we can get above this 200. Now, have there been any cases where the 200 MA was over our head at the same time? Yeah, this one, which was only 18. This one, which was only 30. And I mean, you could count this one. You could count this one where we got the 150 pump. It's just that, well, yeah, I mean, I guess it's valid. So I think the 200 MA, this white line, doesn't really act as the resistance that we might fear it to be. It might cause a a retest or something, but it doesn't seem like it's the biggest factor, does it? And also, if we look at the 2-day, the 200 really acted as support here for the major body, right? And although the 200 MA gave a little bit of extra lift, it was sort of like the bottom line on this 2-day. What you can see is that getting above that 200 is really important, right? For you to be able to jump on it. And when you break under it, it becomes kind of traumatic. So we really want to recover that area. Again, I've been saying it for multiple weeks now, 44,000 to 46,000. We need to overcome that area, and if we do, like some pretty interesting things can happen. And if we get rejected from that area, then, sorry, right? Sorry about that, but that's the risk that you take with volatile assets like crypto. And let's just measure what would a 20% pump be. Wow, this is like the smallest one, right? So it was actually 18. So let's do this. Let's go just to 18. $50,000, right? $50,000. And then what? We saw 25, right? I think we saw like 25. So 53, and then I think we saw 35, so 57. And I don't even want to talk about if we have 150 because that seems a little bit unrealistic in the current economy. But the fact that it has occurred, that would be 110,000. Okay. That's just using the history of the 20 and the 200 squeezing on the 2-day. And if I've messed any of that up, please go ahead and let me know. In case of this big pump, it did come after a huge fall. So I think we can kind of discount this one, right? Because we didn't have that big of a fall as this one, right? This was a 85% fall. And from here, we've only had 46%. So I don't think we should really count on this 150, But could we get up to our old levels up here? Maybe. Maybe. It's possible. It can be a massive fake out, a bull trap that just smacks us back down and we do one of these drops, right? Because that's what happened here. That's what happened exactly right here. We had a similar type of drop, right? Where's the right? Yep, very similar. 40%, right? We had like 50%, and then it recovered, and then when those two crossed, it got a 20% pump. You know, this 18%, 20% pump, and then it crashed back down again, and then it did a very big correction. So just be on the lookout because we might be doing something like this, and this would be the worst case situation, which still isn't that bad. It just means that you start planning, you know, in that 50K area for a possible turnaround. That's all, right? And it all depends on whether or not we can hold this level at 42,000, you know, 250, and kind of sit on top of it and work our way up past that 46,000. And then maybe we can have, you know, the conclusion of this mini alt season that we seem to be having, where the altcoins are kind of pumping before a possible crash. But we're just going to take it one step at a time. We don't have to just, you know, try to plan for everything all at once. We can take it one step at a time and just have a general idea of what you would do if we did pull back severely and what you would do if we did continue to pump. And as long as you have your game plans, and then as long as you know what you're doing, you know, today, you know, while we're in these wedges, right? Because you can see we got rejected. Rejected. We could get rejected to the bottom of this again. And me personally, if we did get rejected to the bottom of this, I would be buying again. If we broke down below 37,000, I would, you know, I might DCA in just right here at this line. But mostly I would be thinking, you know, the uptrend is over because these are just wicks, right? So, you know, if we started putting in price action down here, it'd be kind of more likely that we would keep going down. Plus, you'd have all these squeeze plays pointing in the downward direction, and they'd want to continue the squeeze. They'd want to finish off what they started, and it could take a while, right? So breaking under this wedge wouldn't be a good thing, especially the middle of this wedge. So have your game plan in order, and yeah, that would have been a nice pullback to buy on if you were bullish. And if you're bearish, of course, you're highly aware that we're still in that resistance zone. We're not in the buy levels anymore. We're in the take some profit, you know, take your profits and buy on retraces, take profits. Okay, guys, that was your alpha for the day. You know, stay safe and happy trading.